Hey guys, welcome back to the channel McNallie Money, your home of all things stock, investment, and personal finance related. In today's video, we're going to be providing an update on FlexShopper. This is one that we've covered a few times on the channel recently. They continue to come out with big announcements, partnerships, and press releases, and that's what we're going to be talking about once again in today's video. Before we get into it, please take a second, smash the like button, you guys. It's a big help to myself and the channel, specifically helps get this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join. We just crossed the 46,000 subscriber milestone, and we'd love to have you as part of the community. Finally, let me know in the comment section below if you've ever used the FlexShopper platform, if you're currently holding shares, and your outlook as we enter 2025. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be providing another update on FlexShopper Incorporated, trades on the NASDAQ in the United States under the ticker FPAY or FPAY. Now this is one that we've been covering a lot recently on the channel. It seems no matter how frequently we talk about FlexShopper, they continue to come out with big press releases, new updates, and the share price continues to rally. Now, as you can see, taking a bit of a breather, this is Friday morning, December 20th, down about 2.5% on the day, currently trading hands at $1.56. However, if we zoom out to a longer 6-month view, you can see FlexShopper up 30% in the period, reaching a high of $2.19 on the 2nd of December. Now, it'll be interesting to see how trading continues today as investors position themselves for the holiday break, but this is definitely one to keep an eye on as we're going to talk about in today's video. Now, if we jump over to the investor relations portion of the FlexShopper website, again, this is linked in the video description below. You can see headquartered in Boca Raton, Florida, FlexShopper Inc. offers lease-to-own, also referred to as LTO later on in the presentation, as an alternative payment solution to consumers and retailers. FlexShopper offers cutting-edge technology through their partners, which we're going to look at in a second, that enables the traditional retailer to offer their services and or products to a demographic that they weren't able to previously target, the subprime consumer. Our omni-channel payment solution includes lease-to-own e-commerce marketplace, an on-site e-commerce payment model, and a mobile application for in-store point of sale. So as we've talked about in prior videos, this company really opens up the door to potential consumers who maybe don't have the ability to save up in full for these purchases or prefer to spread the purchase out over time through the lease-to-own option. Now on the right here, you can see the consumer-facing website. We've looked at flexshopper.com in prior videos, a plethora of different services, products, and categories available, really all underscored by this asset-light model. Now, this is something we're starting to see more and more in the world. You've probably heard the description of Uber as the largest taxi company in the world that doesn't own any cars, or Airbnb as the largest hotel chain in the world that doesn't own any hotel rooms. The asset-light model has definitely taken off. It's here to stay because of really the 4 benefits listed on the screen here. So number 1 is access to capital to support growth. So in the case of FlexShopper, this is as of Q2 of this year, but a large cash stockpile and over $30 million at that time of permitted borrowing capacity. So with this asset-light model, they can put their hands on a lot more inventory than if they were to have to go out and purchase that stock or products up front. Now that leads us into the second category here, no inventory risk, because of these strategic relationships with dealers and manufacturers who offer drop shipping products directly to customers' homes, eliminates any inventory requirements and the capital cost associated with storing, warehousing, insuring, and transporting all of that inventory. Again, which beautifully folds into the third point, talking about the low CapEx requirements of this asset-light model. And then finally, that allows them to grow focusing on capital allocation priorities without needing to put their money into inventory, in turn, which frees up FlexShopper to allocate capital to their technology roadmap, marketing, and other LTO or lease-to-own growth. Now, I want you to keep this asset-light model in mind as we talk through the next updates here, because they're great examples of exactly what this enables FlexShopper and the platform to do. Now, in our last video, we saw a great example of this, talking about their partnership or their exclusive lease-to-own partnership with United Wheels and its portfolio of bike brands, including Huffy, which is obviously a huge addition to their portfolio, including brands like Huffy, Niner Bikes, Batch Bicycles, Vast Bikes, and even Buzz e-bikes. And as we talked about in our last video, this was really in partnership or because of their growing relationship with Pay Possible, which is a premier financing waterfall platform. So a great example of both the asset-light model, getting access to all of these bicycle brands, products, or inventory without having to put up any initial capex, and a great example of how these strategic relationships and partnerships really come to fruition for FlexShopper. Now, interestingly enough, in the corporate presentation, again available on the website, you can look at some of their technology partners, with Pay Possible listed first and foremost here, along with a long list of others, including Synchrony, Terrace Financing, Versatile Credit, and Pay Tomorrow, with each one of these partners really focused on improving FlexShopper's technology stack or tech stack. They've also got a number of funding and distribution partners, including Synchrony once again, Citi, Own, Bread Financial, and Vernance. And it's really in part to these best-in-class tech partners that have allowed FlexShopper and their business model to become highly differentiated from any other players in this space. So again, a great example of how this Pay Possible partnership in this example was able to open up a huge opportunity in the bicycle market for FlexShopper. Now this is where it gets really exciting. In addition to that big press release, and only a few days later, they came out with an additional PR talking about FlexShopper partnering with Tire Agent to expand their tire shopping options for near prime credit customers. So this one actually came out on December 16th. And again, an awesome opportunity, especially going into winter here, as many people are looking to purchase or swap out winter tires, of opening up a huge new category to the FlexShopper audience. So once again, this is an asset-light model. We're going to look at the details in a second here, but another perfect example of a partnership opening up opportunity with very minimal upfront capex. So they go on to say FlexShopper is pleased to announce a new partnership with Tire Agent. Tire Agent currently originates over $100 million in lease-to-own transactions annually and is a two-time honoree on the Inc. 5000 list of fastest growing companies in both 2023 and 2024. This new collaboration integrates FlexShopper's payment solutions directly onto the Tire Agent website and establishes Tire Agent as the preferred online tire retailer for the FlexShopper marketplace. So there's two customer-facing points here, the FlexShopper marketplace itself, and of course, this Tire Agent website. The partnership also launches flexshopper.tireagent.com as the combination of the Tire Agent's top-tier tire and wheel inventory with FlexShopper's flexible payment options. And this is actually a look at that flexshopper.tireagent.com website here. You can see the most affordable way to buy tires and wheels online, which unfortunately are quite expensive, a simple and streamlined order flow process, and you can see that exclusive partnership with FlexShopper, meaning tires and wheels have never been more affordable. And again, you can see some of the benefits of LTO or lease to own, no money down, 52-week financing, weekly payments, and a 90-day same as cash option. Now, if we jump back over to the press release, you can see this partnership is tailored to support near prime credit consumers or individuals who may not qualify for traditional prime financing but still need access to flexible payment solutions for these essential purchases such as tires. Tire Agent's dedication to making tire purchases more accessible aligns perfectly with FlexShopper's mission to offer affordable payment alternatives. Now, Russ Heiser, who's the CEO of FlexShopper, goes on to say, "We are excited to partner with Tire Agent, a company that shares our commitment to improving consumer access to vital products. Our lease-to-own payment solution provides Tire Agent with the perfect option for near-prime credit customers, allowing them to afford high-quality tires that are essential for their safety and reliability of their vehicles." So again, considering we're going into the holiday season and winter driving conditions, a very timely press release or announcement indeed. Now, as I read through these recent press releases, it really reminded me of the slide in the deck, slide 16, talking about the capabilities to grow each transaction and support the growth of this flywheel. And it really does make a lot of sense. Each consumer added to the FlexShopper marketplace further refines their proprietary algorithms. It strengthens the insights into the consumer behavior and marketing capabilities and increases the attractiveness of the FlexShopper platform to both merchant partners and consumers in the process. So the idea here is simple. We just talked about the addition of some new products or merchants, so we'll start there. They add more merchant partners into the ecosystem. This brings in more consumers, in this case, who are maybe looking for tires or bicycles. That leads to more sales and originations, which in turn creates more consumer data, which we just talked about. This leads to better insights and an ability to refine their proprietary LTO platform, which in turn attracts or drives more merchants to the partner platform itself. So this is the exact type of flywheel ecosystem that businesses love, as it really becomes a snowball effect. And once they achieve that initial inertia, as we like to say, an object in motion generally stays in motion. So with that being said, you guys, another great announcement from FlexShopper going into the holiday break here. This company has a lot of moving pieces, a lot of excitement around this brand and the optionality it provides to consumers, really highlighted on this slide here, talking about some of these key growth strategies to drive or unlock shareholder value. So for those reasons, you guys, I'd be super curious to hear your thoughts, specifically if you've ever used the FlexShopper platform yourself, or if you're currently holding shares. As we can see here, they're aggressively growing their total addressable market. They're pursuing additional technology payment and retail partnerships, as we just saw, expanding their marketing efficiencies, increasing retail opportunities, and continuing to grow their merchant count and physical store count to better serve their customers. Now, if you're still watching the video, hopefully you found some value. Make sure you hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. We just crossed 46,000 subscribers. We'd love to have you as part of the community. That's all for now. Thanks so much for watching, and we'll see you in the next video.